The Saudi real estate market is adjusting to the new norm of lower oil prices. And in 2006, what we saw is the government announced a major new initiative called the Saudi Vision 2030. Now that's a long-term plan, but it's now starting to have impacts on different parts of the real estate market. So what JLL has done is it's developed a series of trends that we think will impact different parts of the real estate market as a result of that change in the economic structure. Probably the two or three main things that we think will happen is that there will be a major growth in activity from the pension fund, the new pension fund, which is called PIF, which is the new Saudi state pension fund. That will become a much more active player in the Saudi real estate sector in 2017, and that has implications for many different sectors of the market. Another major aspect of the Saudi diversification plan is to attract more tourists and more visitors to the kingdom. What that means for 2017 is that the Saudi authorities are going to relax quotas around religious tourists and pilgrims coming into the kingdom. That is going to result in a major increase in demand from pilgrims, from visitors. That's going to be a major boost to both the hospitality and the retail markets in the western region of Saudi, which will benefit most specifically Mecca and Medina and Jeddah. And what we believe that those markets will actually perform quite strongly on the back of the new relaxation of the restrictions on religious tourists. Over the longer term, Saudi wants to diversify its tourism base into other aspects, leisure tourists and other visitors from outside of the kingdom, not non-religious tourists. But we think that will take more time. That's probably not going to have much of an impact in 2017, but certainly there will be a boost from the increased number of religious visitors, religious pilgrims visiting the kingdom in 2017. Another major aspect of the diversification plan is basically to launch new vehicles for purchasing of real estate. We've seen a number of relaxations in respect of real estate investment trusts, REITs. There has been a number of new REITs already launched, and we think there will be new REITs launched later in the year. So that's again is opening up the market not just to Saudi investors but also to foreign investors. Perhaps the biggest opportunity in the Saudi market is in respect of affordable housing. The government is recognising that and is trying to encourage more development of affordable housing across all parts of Saudi. And that's going to have major implications for the real estate, for all parts of the real estate, for both investors, for developers, for operators. So we think that will be a major sector to keep your eye on in 2017, the affordable housing sector. And what the government is doing as part of that is trying to launch a series of public-private partnerships, or PPPs. These are partnerships between the government and private sector investors and developers. These will particularly focus on the low-cost or affordable residential market. We've already seen a number of those being developed, and we think that will be a sector where there will be more activity, and that will open up opportunities both for local and for foreign developers. And perhaps the final point about Saudi in 2017, and one of our important top trends, is going to be around taxation. We're starting to see tax becoming a more important issue, not just in Saudi but in other parts of the GCC, where there has been the VAT announcement which will come into play in 2018. But certainly in Saudi Arabia, the big topic probably at the moment is the white land tax, which is being rolled out over the first quarter of this year. So in the three major cities of Riyadh and Jeddah and Dammam, we will be seeing landowners of vacant and undeveloped sites within those three cities being issued with tax notices over the next 3 months. And that's going to have quite a major impact on the market. Some owners are going to seek to redevelop their land to avoid paying tax on it. And what that is going to do is to encourage the supply of new properties. And again, this policy is being aimed largely at increasing the supply of affordable housing. It's part of the government strategy to increase the supply of housing, but it will obviously have major implications for what developers do with their sites. So how property will perform in an increasingly high tax environment or increasing tax environment will be one of the things that we'll be watching out for in 2017.